Well, welcome everyone. Thank you for coming today. I'm Katie Randall. I'm one of our advisors and partners at Prime Capital. I decided to put together this webinar kind of at the last minute because I sometimes get feedback that I get my statement in the mail and I don't quite know what I'm looking at. And so that's really why I put this together for you today. What I've done here is I'm sharing my screen for a sample Schwab statement. Now we work with multiple custodians. We work with Schwab, we work with Fidelity, with Goldman Sachs. But for the great majority of you, I think Schwab is where your assets are held. And this will also translate to looking at a Fidelity statement or frankly, any other statement that you might have in your life. We're going to go over some general concepts today that you'll see on your statement and also what's not on your account statement. I sometimes get questions about whether you can gauge your returns and your holistic portfolio from an account statement. And actually the answer is no, and I'll tell you more about where you can get that information to. So this is what you see when you open up the mail from Schwab or you click into your documents library on schwab.com and you download your statement. And there's some important things that I want you to see here. First is your account titling. So in this case, this family, Matt and Marie Sample, they have a joint tenants account. The titling of our assets is one of the most important things about how we own things, who owns it, and how it flows through our estate plan. So knowing that the account titling is very important. So if they have a joint tenants account, you may have, say, an individual account with TOD, transfer on death. So these types of titling nuances are really important. So here, Matt and Marie own their account as joint tenants. You may have a trust account or a TOD. These are really important on who owns the money and where it goes after you pass, if something were to happen to you. You're going to see your full account number here. You're going to see that we're your investment advisor, or maybe you have a different investment advisor. That information will be shown here. And you're going to get a quick glance of what's included in this statement when you look at the front. And usually people don't get terribly confused by the front. It's really what's included in the other pages. So we're going to go through that today too. So Matt and Marie have this joint account with an ending value as of the month end of $407,000. Started the month at $389,000. So we automatically know that either their investment fluctuation or money movement has changed that value in some way, right? So you'll see that they started the month with $389,000, but they had some other things going on. They deposited $40,000, they withdrew $14,000, they received dividend income, and they also had some market appreciation or depreciation. In this case, they had a small depreciation of their assets, which just means that this month, February of earlier this year, we saw markets go down a little bit. So that meant that their ending balance was $407,000. So we're going to be able to see these flows on every page of the account statement. But I do have clients often giving me the feedback that these statements can be confusing. And so I'm just helping you point out today, what are some of the things that you can look for? This next page also tends to be a pretty helpful snapshot. So you'll see that your asset allocation is noted here. And with this particular client, they're holding quite a bit of cash in this account right now for a specific purpose. They have about 26% of their account in cash or cash-like investments. We have 60% of them invested in mutual funds and 13 in ETFs. So it just gives you a quick sense of just what are like the big picture investments. However, I also promised you I'd tell you what statements don't necessarily show us at a glance. So one of the things this is not telling us at a glance is it's not saying the types of mutual funds that this couple is invested in or the types of ETFs. We're going to find that out a little bit later. But also, this is why Prime Capital overlays other technology onto Schwab, because Schwab has a specific job, and that's really to do your tax reporting and your transactional reporting. It is not trying to tell you how you're invested, why we're doing that. It's not trying to tell you what your holistic portfolio is doing. We really do that for you. And lastly, you are going to see things like your income and your gains or your losses on here from more of a tax lens. It's not going to tell you what your total return is from a percentage basis, nor should you be trying to calculate that yourself, because it doesn't take into account the power of compounding, and it also doesn't tell us the right calculations when you have cash flows in and out of your account. So again, we have a performance reporting system, and I'll show you how to log into that from our website, that really takes into account this total return that we have in our investment experience. And unfortunately, Schwab won't tell you that because number one, they're not the advisor on your account. And number two, their job is to think of them as more of a tax reporting function. So everything that flows through your account is either going to show up on your 1099, which Schwab is creating for you, or it may not necessarily be taxable, but will end up on your statement. So showing your top holdings here, again, that's not necessarily giving you a ton of information about your investment experience as a whole, but we'll give it to you at a glance. And in this period, there were no short-term or long-term gains or losses that were created by the investment advisor, which in this case was us. That just means we didn't sell any positions that were either at a gain or a loss that's going to hit their tax return. But year to date, we have realized a small gain. So that's what this is showing here. The other thing that we see is that they have a pretty large unrealized gain in this account of $137,000. These are investments that they own that have already appreciated with the market, but we have not sold them and created any kind of gain. And that's because we do that very intentionally when we do, make transitions in the portfolio or have to sell something for cash. So the other thing that you're seeing is the income that's coming in, some of it being tax exempt. There might be some bonds in here that they don't pay taxes on, those dividends, and there's also some taxable dividends from mutual funds, bond funds, and the like. So there's a quick summary of that. So Schwab tries to do the math here for you on how it got to this value. So they had a beginning value of $389. We had some cash activity. We also took some money out of the account, which I'll tell you, and we had a slight short-term unrealized loss in the market. So that ended up at $407,000 for them. This is where some of my clients get the most tripped up, is in the cash activity, and it's understandably why. I'll get into those details soon. So we have these things called bank sweeps, and we also might have like a money market or a cash position in the account. In this case, my client has been holding they started out with about $80,000 in the money market fund. We did that really intentionally for a cash need they have, and they also brought in an extra $25,000 during the month into that money market fund. So they ended up with $105,000 in their money market fund. This is something that's a cash-like position, but it earns a higher yield. But we also have this default Charles Schwab Bank position. That's where if you have a dividend that gets paid, or you have a little bit of interest income that's accumulating, it's going to be swept, which is why we see a lot of activity in Schwab that are called bank sweeps. It gets swept into this default Charles Schwab Bank position. So my client's total cash position this month is $26,000. Most of that's in the money market. Some of it's in the default bank sweep. This client in particular, their other positions they hold are in mutual funds, shows the tickers, the cost basis that we bought them at, the realized gain or loss that they're being held at. And this is true if you had stocks, you would see the stock positions, you would see bond positions. In this case, the other part of their portfolio is made up of ETFs or index funds. And so those are all listed here. The big picture thing I want you to see is that, let me go to the bottom here. At the very bottom of your statement, after the whole collection of your investments, you're going to see the market value, importantly, the cost basis, which is what we bought the position at, and then the unrealized gain or loss. So this kind of tells us what has been the overall appreciation or depreciation of these positions since we bought them. You can see that, like in this case, sorry, this is going a little fast. In this case, their mutual fund position, which is the core of their portfolio, was 245 at the end of February. We bought those positions at 113, so about half of that position is at a gain. And this is where sometimes things can get a little bit muddled, but it's really important to take a look at, which is your transaction details. So if you really want to understand the money that's coming in and out of your portfolio at any given time, you can look at your transaction history. It's going to include any trades that we made. It's going to include any money that we journaled in or out. It's going to include if we send you money for your lifestyle, we pay your taxes for you, we withhold taxes for you. Any of those kinds of activity are going to be on this report. And then also part of your return is your dividend income and your interest income, and that's going to be shown here too. So this client, right before we filed their taxes last spring, we made some IRA contributions for them. So I know, because I know this client, that we journaled funds, which means we moved funds from one Schwab account to the other. We moved $7,000 for each spouse out of this account into their IRAs. So that's part of where that money went. We also sold some of their money market funds to do that. So you'll see there's a trade, a sale. They pulled in $40,000 from their credit union. So we helped them with that. And then they accrued interest, they accrued dividends. They, let's see, they also had some money, this $40,000, you can see we bought some more money market with the accumulated cash. This is also where you would see a lot of sweeps. So some of my clients get confused by that. What is a bank sweep? And as I described earlier, anything that you see as a bank sweep is cash that's sitting in your account, maybe received from a dividend, that gets captured by this default cash position, swept into that cash position. So now it's sitting in the Schwab Bank default cash position. So sometimes we see a lot of those transactions and it can be kind of confusing. So you can see here that we, in total, have about a $42,000 credit to this account for the month. It included some transfers and also some sweeps from those dividend positions. And right now, the ending cash balance they have in their Schwab Bank position is $2,500. And that interest rate is pretty low. So it's just like, our normal checking accounts, not earning a lot of yield. This is why when we have clients that hold larger cash positions, we might choose a money market fund, a CD, something like that we can shop around and get a better yield. Then, of course, they have some disclosures on the back that if you ever have insomnia, you're welcome to read. But I'm actually going to stop my screen share for just a moment because I would love to hit on a couple topics that I wanted to bring to your attention. So there are things that are not on. Let me see if I can get my camera here. Hello, everyone. So there are a few things that you're just not going to see on your Schwab statement that really need to be provided by your investment advisor to understand how you're doing, because Schwab isn't responsible for calculating your total return. What they're responsible for is money in and money out and tax reporting. So we need to kind of take those data flows that they give us and feed them through our systems that help calculate your total return experience. That is our system called Orion. And if you go to primefinancial.com, there's a login in the upper right-hand corner that says client login, and you can click on Orion, which is spelled like Orion's belt, the constellation, and you can log in. And if you've never logged in before, we can set up your account. But that is really a collection of all your Schwab accounts, your compound total return, And the important thing about performance calculations is that we do it in such a way where if you're adding money actively to your account, Schwab's statement might just make it look like your account balance went up, when really all you're doing is adding money. So we can't really count that as part of your performance, right? So the way that we calculate your performance is a method called time-weighted returns. And it makes sure that Prime is not taking credit for money that you've added to your portfolio. We only take credit and calculate a return on what is appreciated and what is received in your interest and dividend income. And secondly, if you take money out because either you're retired or you're remodeling your home, we don't also penalize your returns for those cash flows. So it might be easy to think about, I'm just going to go to my statement, I'm going to see where it started and see where it ended, and that's my performance, but it really doesn't tell the whole story. So that's why we use tools like Orion to calculate your returns, because you'd be shocked by how complicated that actually is. It's actually called geometrically linked returns, and it really gets at that complex calculation of your performance. And then secondly, I want you to know that the other piece of your story is your financial plan. So performance is important, and it kind of shows how sustainable our plan can be. But what's even more important than your return, if you can believe it, is your lifestyle and your spending rate from your portfolio. So that's why at Prime Capital, we are so just passionate about financial planning and making sure that your financial plan is sustainable based on your performance and your lifestyle. So it's how do we marry those two things together, where we have a healthy performance rate and we have a healthy spending rate for complete financial freedom. So again, the statement doesn't tell the whole story, but hopefully you've seen some of the key things to look for in your statements. And I would just love to hear from you. If you have follow-up questions, we can even go through your own statement together. If you've never set up your schwab.com access or the app, if you've never set up your Orion or your planning software, let me know and we'll get you going on that. And with that, I'm just going to check my questions really quickly. Good. Okay. Well, thank you for coming, and do let me know if you have any questions. Your team here can also help with things like resetting your Schwab passwords and the like. All right, everyone, have a great day.